Good morning, trading world. It is August 29th, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. It is 7:36 a.m. on the East Coast. If you have been following my pre-market videos the last 2 weeks, you would know that I am expecting a bigger repeat of last Friday and Monday. A bigger repeat means a bigger down day Friday, which we got, and a bigger gap down Monday, which is coming. I couldn't sleep last night. I was like a kid waiting on Christmas, but instead of looking for Santa, I was checking on the SPY. Now, for those that don't remember, Black Monday happened October 19th, 1987. It's when the Dow Jones crashed 22% in a single day. Some may not believe that history repeats itself, but it sure does rhyme. In case we have a similar situation, the market has built the circuit breakers to try, and I put emphasis on try, to prevent such things. Market-wide circuit breakers provide for cross-market trading halts during a severe market decline as measured by a single-day decrease in the S&P 500 index. A cross-market trading halt can be triggered at 3 circuit breaker thresholds. 7% is level 1, 13% is level 2, and 20% is level 3. These triggers are set by the markets at point levels that are calculated daily based on the prior day's closing price of the S&P 500 index, as quoted from Investor.gov. Another thing to remember is if any of this happens in the last 30 minutes of a market day, then the circuit breakers double these amounts. Oh, and if you are curious, the first circuit breaker would happen around 377 level today if needed. Now, normally, after the last couple days like I've had, I would be preaching turtle mode. Take it easy or no to low trading. But if this plays out the way I've been saying, this is still coming into one of the best trading periods that you only see a few times in a lifetime, thanks to the over-induced Fed policy. Now, if we have a sizable gap down, normally following my rules, I would be thinking trend day down. However, there will be nothing typical about the market for a while. Friday's decline was maybe more than 3.5%, and the VIX barely yawned. When we were climbing and all the talking heads on TV were trying to convince you that the new bull market was here, I was busy placing a myriad of $10 wide VIX bull call spreads starting above 26. So for me, this is just the beginning. For the panicked or untrained, there will be a temptation to throw caution to the wind and buy a crap load of puts at the open. Don't. Never short in the hole. Whether we hit a circuit breaker or not, there will be some short covering that will lead to a pullback or a small rally. This is your chance to get short. Oddly enough, I put on a few extra ATM puts on both the SPY and the Qs just in case we had this gap down. Now, my weekly outlook is bullish bias, closing above the 405.31 with a possible retracement of around 413. Now, whether you believe this outcome or not, it tells us to look out for pops or failed rallies, possibly leading to or ending around the previous close or at the most the 413 area. Trading days this week will seem abnormally long, so if we have a trend day, don't be surprised if it feels like a trend one way for part or 3/4 of the day, then the other direction the next 3/4 or part of the day. Keep an eye on volume. Friday was the first day. Let me bring up the daily chart. As you can see, Friday was the first day that we got volume spike above the average volume. Look for this to continue going up on the bear side to confirm everything I've been saying. Now let's get into the key levels for the day. All right, here we are back with the key levels for the day. Starting on the resistance side, we have our jack resistance at 402 to the 403 level. Our queen resistance at 405 to the 406 level. This will probably be key today around this level, and there's a black line that represents the previous close. So look for that to be a powerful resistance and possibly an area to jump short again. Then we have our king resistance level, which is 407 all the way up to the 413 area. On the support side, we have our jack support at 400 to the 399 area. Our queen support 397 to the 395 area, which will also probably be key today at some point later in the day. And then our king support, which is way down here at 387 to the 370 level. There's a green line here on the screen that marks our market makers expected move for the week. So as you can see, we got a little ways to go, but not far. And below this line, things will really get crazy this week. Now, the main thesis for today is bullish, closing above the 405.31 with a projected target high of between 406 and 413. The alternate thesis is bearish, closing below the 405.31 with a projected target low of between 400 and 374. All week, you better be prepared for a more explosive alternate thesis. The current major channel we are in is 416 down to 397. The major channel below is 397 down to 379. We're probably going to see every bit of those major channels soon. So keep those in mind. I know these numbers seem extreme, but don't put anything past this market right now. Let me bring up the scenarios for the day. All right, our first and most probable scenario is going to be our trend day down. We open, gap down, and start with a rally back toward the previous close represented by the blue line. We find resistance on or before that previous close, then we begin the downtrend for the day. Now, normally I say or I talk about the midday chop around either the possible queen or king support area, but this is not going to be a typical down trend day structure. Be prepared to see a longer than normal rally up and then a shorter than normal midday chop and then a longer than normal fade or golden window that may span all the way to the close or pretty close to. So those are things to kind of be prepared for, and I should have typed that up. I'll try to go back and make that change. But these are things that you're privy to in the video as I get to talking and think about things that didn't come to me as I was writing. So be prepared for that. Like I said earlier, none of these days are going to be the typical day structure. So everything is going to seem expanded or a lot longer than normal. And actually these day structures are probably going to blend days or blend into the next day. All right, let's get to the next scenario. All right, our next scenario is going to be our rounded reversal day type structure. We could get a continued push higher toward the Jack or Queen resistance area and find midday chop around either the Queen or King resistance before spending the same energy we use going up to come back down the second half of the day. And again, none of the day structures will be typical the next couple of days, and that's kind of why there's kind of a blend. Like the rounded reversal day structure or the trend day down looks a lot like the rounded reversal day, but that's because we're in a non-typical situation. Usually I give a vice versa alert on the rounded reversal day type structure, and all that is, if we get going a little more to the upside and we start to come in and we continue lower after the cash open, that vice versa alert would just look like this, where we would come down, find our midday chop, and then go back up with nearly the same amount of energy that we came down during the first part of the day with. So that's the rounded reversal day type structure, and you have to recognize that the VIX is starting to creep back up. It's starting to creep up, and the closer we get to 30, the more it begins to kind of throw things off. So we'll get crazy powerful moves both up and down when we get close to that 30 area on the VIX. Let's bring up the last scenario. Our last scenario is our expansive range day structure. We could look to have what seems to be a powerful move up and start to give it all back at some point late in the day or after hours. So that's our expansive range day structure, and I need to correct some things here on the write-up. Give me a moment while I do that. Okay, sorry about the choppiness of the diagram today, because I didn't give myself enough room, but there's going to be a little back and forth or a little chop as we muster strength up to kind of keep going and get to and through the previous close. So those are the scenarios of the day. These are the things to be prepared for. As you probably know, like, I've been positioned for this for quite some time. And one of the things that I want to prepare you, and I usually always mention this in close, your most important job as a trader is to first protect the capital that you already have. And we do that by knowing and understanding the risk that we take and have on in each position, and we manage that in accordance to our account size. These are extreme times right now. So if you don't feel comfortable, please, even if you do feel comfortable, please cut down your size. Because right now, it only takes a quarter of the size that you would normally put on to make the same amount of money, if that makes sense to you. And the market is moving at extremes. So you have to feel comfortable with whatever the max loss of any position that you put on, because we are moving to those extremes right now. So please be careful. Protect yourself. Put on positions that are defined risk positions, meaning you know exactly how much the max loss is, and you're comfortable with that. With that being said, I like to close out each video wishing you a positive trading day. Have a great one.